Chicago-Kent College of Law professor Lori Andrews, writing in a New York Times op-ed piece today, says that Facebook's inventory essentially consists of personal data from individuals. Now, that data is proving to be valuable, as Facebook's valuation could be as much as $100 billion when it goes public this spring. Now, my next guest, Jack Hidary, is the chairman of RealTimeMonitor.com. Company has developed a social media tracking tool for institutional investors. It also has a license for data generated by Facebook and Twitter. Jack, always a pleasure. Good to have you with us. So before we talk about RealMonitor.com, I want to find out a little bit more about what's going on with Facebook. All of that information that exists, they're going to try to monetize that, right? They're going to try to sell that information to advertisers in one form or another.
Well, they do that right now.
Yeah, exactly.
They have 100 petabytes of information. Yeah, all about us, our photographs, our connections, our friends, and they use that information in order to sell very targeted advertising, which actually does work. That's the great thing about Facebook, that the advertising is much more targeted than traditional media. In traditional media, you have to put out a big ad somewhere, hard to exactly know what demographic you're getting sometimes. With Facebook, it's extremely targeted. So that's one of the reasons why they grew 89% per year, and now we're at $3.7 billion in revenue with $1 billion of income coming to the bottom line.
Does this targeted information mean, though, that advertisers will pay more than for a traditional advertising venue?
Well, right now, actually, it's still lower because advertisers are getting used to this new medium. But I think over time, it's going to be very valuable. The key question is, what are the users going to do? The fact is, while Mark Zuckerberg in his letter in the S-1 filing says that we are an open company, he says Facebook is an open company, the fact is Facebook is still what's called a walled garden. When you send email inside Facebook, it's inside Facebook email. And they're making some attempts now to connect to the larger internet. But Facebook is still a walled garden, just like AOL was. And remember, AOL was valued at $180 billion before they took over Time Warner. But ultimately, the open internet ultimately crushed AOL. We'll have to see how Facebook deals with this issue of being a walled garden and how they could break out of that, because customers and consumers ultimately want control of their own information.
All right, but if they want control of their own information, doesn't Facebook give them the tools to do it, and they're still Facebook tools?
Yeah, Facebook gives you the ability to download your own information, and so far, 99.9% of people don't actually choose to do that. They actually keep their information right inside the walled garden, and they're happy to do so.
Well, it doesn't cost them any money.
Exactly. But what happens 4 or 5 years from now, 6 years from now, when people have other options to connect their social and personal information? What happens then? Just like AOL users ultimately had that option to go on the open internet. That's going to be the question. How does Facebook deal with containing their users and leveraging them, but also offering them openness? That's the tension. One of the tensions they have to deal with.
You mentioned sales, $3.7 billion in sales.
And now, exactly.
What does that translate into?
Well, look at revenues per employees.
Right.
It's very interesting to look at that. So Facebook today has about 3,200 employees with about $3.7 billion in sales. That's about $1.1 million in sales per employee. $1.1 million per employee. To give you a comparison, Google is at $1 million, just about the same area. Microsoft is at $700,000 per employee, and Walmart is only at $200,000 per employee. So you can get a kind of a sense of why some of these tech companies are so highly valued, because the leverage they get per employee, per worker, is really very, very high. That means their costs are relatively low compared to the revenues that they generate. So that's one of the metrics I think people want to look at.
Tell me about what you're doing with the data that flows from Facebook and Twitter. How are you managing that information, and what's its use?
Well, what we're finding now is that you look at the Facebook S-1 filing, you see that they recently had 845 million monthly active users, MAUs as they call them. So what we're seeing is with 161 million of those in the US, 260 million of those MAUs in Europe, and more elsewhere in the world, we now can use Facebook, Twitter, and other social media as a proxy, as a kind of a telltale of where consumer sentiment is at on various brands. So if you see people tweeting about Burger King or tweeting about Disney or tweeting about United Airlines or updating their Facebook messaging around that, you can begin to get some sense of how consumers feel about those particular products. And what we do at Real Time Monitor is apply sentiment analysis. That is, we look at the emotion around that.
So whether this is a positive comment or a negative comment about a particular brand.
Exactly. And so you can actually gain a lot lot of knowledge as an investor from looking at the aggregate of all this information. Not any one particular tweet or Facebook status, but the aggregate of tens of millions of these becomes actually a useful data point in looking at these particularly consumer-branded companies.
Do you still face the challenge, though, like many social media sites, of determining what's real and what's manufactured online? How do you know who the person or people are that are putting this information up?
That's a great question. One of the things that Facebook is really good about is making sure that the identity of that person on Facebook is their real identity. You know, there's been some controversy recently about people who might have changed their name or things like that. And so Facebook is really intent on making sure that if you're Pimm Fox on Facebook, you are really Pimm Fox and not somebody who's impersonating Pimm Fox. And so that's something that actually helps us in looking at consumer sentiment, because we actually know that there's accountability in the system for who those people are.
Does that accountability come with this walled environment that you described?
Well, partly that comes with the walled environment, partly becomes because of rules that they enforce, because they want to make sure that the person that's connecting with all these friends is really who they say they are. And Google Plus, what's interesting, I just came from a Google conference in Silicon Valley, really interesting gathering, and Google's now really thinking about how do they meet the challenge of social media as well. Google's also taken this policy of really trying to make sure that the real identity is specified. Twitter, though, still allows you to have pseudonyms. So it's interesting to see where these walled gardens will go and where the open internet will go. That's going to be a key determinant of the ultimate valuation of Facebook.
I want to thank you very much, as always. Jack Hidary, very compelling, interesting thoughts about Facebook, social media, joining us from realtimemonitor.com. Thank you.